Hello traders, I am making this video to explain a very important concept of risk management. This video is very important, very critical. Please watch this video till the end and follow this video throughout your trading journey. First of all, I want you to decide an amount called trading capital. It is an amount which you decide to bring for trading. It may be the amount which you put into your demat account for trading. Let us say that you decided that your trading capital will be 10 lakhs rupees, right? So this is the first step you have to do, is determine your trading capital. For 10 lakhs of rupees, now you have to determine what will be the amount which you will risk per trade. The maximum loss which you will take per each trade, you have to determine that amount. Now generally it is 1%. A very conservative trader would risk just 1%, that is 10,000 rupees. An aggressive trader, a little aggressive trader can risk 2%, that is 20,000. A more aggressive trader can risk 3%, and a even more aggressive trader would risk 4%. Now this would be very aggressive, right? Now if you ask me, in any case I will not risk, or I will not recommend you to risk beyond 4%. 4% is the upper limit beyond which you should not risk per trade. So this amount can be anywhere between from 1% to 4%. Now let us assume that you are a moderate trader and you like to risk 2% of your capital, right? So in each trade you will risk 20,000 rupees only. Now let us say that your capital is 15 lakhs. So for 15 lakhs, if you decide that you will risk 2%, then the amount comes to 30,000. So you should be prepared to lose 30,000 in each trade. Losing 30,000 in a trade should not give you sleepless nights. It should not make you worried. You should be easy, you should be relaxed. So the risk amount has to be decided very carefully. Let us say that you have a capital of 5 lakhs. Now if you want to decide your risk amount, think of an amount which you think if you will lose, you should not be worried. Maybe it will be 5,000, maybe it will be 10,000, maybe 15, maybe 20, depending upon your own capacity. If you are a very aggressive trader, then you could also be risking 20,000 in each trade. That's not the matter. But once you decide a particular amount, let us say that you decide 10,000, then keep this amount constant. You need to keep this amount constant. Now in few trades you risk 10,000, in few trades you risk 15,000, in few trades you risk 20,000, then the results will not be good. Your psychology will be interfering with your decisions. It will not be your objective decision. So that is why I recommend that keep your risk amount very consistent. Now for the sake of explanation, as of now, I will assume that you are entering into the markets with a capital of 10 lakh and your risk capacity is, or risk appetite is 20,000. So in each trade you will risk 20,000. For the sake of this example, we are assuming that your capital is 10 lakh and in each trade you will risk 20,000. 2% of your capital you will risk in each trade. Now how do we decide the quantity to trade is an important question and needs discussion. Now let us say the first trade is here. Let us say that the trade is such that you can buy Titan at 954 with a stop loss of 920 and a target of 996. So the first thing you need to decide, you need to calculate is the loss points. How many points will the trade move against your position? Then it will give you the loss. The loss points will be calculated as buy price minus stop loss. The trade will move down 34 points and then your stop loss will be hit. So the loss points you calculated here will be 34. Now your risk capacity we have identified as 22% of your capital, that is 10 lakhs. So your risk capacity is 20,000. Per trade you are willing to risk 20,000 rupees. Now to determine how many quantity of Titan you should buy, what you have to do is divide your risk capacity by the loss points. So in this trade you have to buy 588 quantity of Titan. Now if you look at the futures of Titan, the lot size is 750. Now can you tell me how many lots will you trade? It will be calculated as 750 divided by 588. It will be divided by 588 divided by 750. So the answer comes to 0.78. So whether you will take this trade or not? No. Why? Because there is no lot size called 0.78. If it would have been 1 or above 1, we would have taken this one lot. But since the risk per trade is exceeding 20,000 here, if you buy 750 lots, if you buy 750 quantity, that is just one lot, then the risk you are taking is 750 multiplied by 34, that is 25,500. But the actual risk you are supposed to take is 20,000. So this trade is exceeding your risk limit. So will you take this trade? No, you will not take this trade. Now let us have another example. Let us say that the trade is such that you can buy Reliance at 1000 with a stop loss of 990 and a target of 1015, right? Now can you calculate the loss points? What is the loss points here? It is the buy price minus stop loss. So 10 rupees. Your risk capacity remains the same always, 20,000. How many quantities will you trade? 20,000 divided by loss points, 2,000 quantities. Now if you look at the lot size of Reliance, it is 500 quantity. In each lot of futures they are having 500 quantity of shares. So how many lots will you trade? It will be 2000 divided by 500. So in this case you will take this trade with 4 lots. You will buy 4 lots of Reliance. Whether you will take this trade? Yes, I will take this trade. Now if I buy 4 lots of Reliance, it means I am buying 2000 quantity. If the trade goes into loss, it will be the maximum loss here will be 2000 multiplied by 10, that is 20,000. So this trade is fitting within your risk limit and you are supposed to take this trade. One more example. Let us say it is Bajaj Auto. This time it is a buy at 2033. We are setting a stop loss at say 2000 rupees and a target of 2080. We can calculate the loss points as buy price minus stop loss, that is 33 rupees. Our risk capacity remains the same, 20,000. In each lot of Bajaj Auto there are 250 shares. The lot size is 250. Let us calculate the quantity we can trade with this one. Risk capacity divided by loss points. We can take a trade of 606 quantity. We should buy 606 quantities and the lot size is 250. So how many lots should we buy? We should buy 2.42 lots. Whether we take this trade? Yes. Now in real market there is no such thing as 2.42 lots. So now it is your call. I would suggest go conservative. I would suggest take a trade of 2 lots, not 3, right? But it's again depends upon your style. If you are an aggressive person, you will go with 3 lots. If you are a conservative person, you will go with 2 lots. But once you decide that in such a scenario you are going for upper rounding off or bottom rounding off, I mean you are trying to raise this to the next whole number or you are trying to reduce this to the next whole number, then keep that thing consistent. You should not change this. Once you decide that in such cases I will take 3 lots, then you do it with every trade. Whenever the result comes in point like 2.4, 2.3, then you take 3 quantity. Again, if it comes at 4.5, you take 5 lots, right? So keep the result consistent. That is what I am trying to say. Now let us take an example of the short trade. Let us say that we are shorting HDFC Bank. So the trade is getting entered, we are selling it at, let us say, 860. The stop loss, we are keeping it as 882 for a target of, say, 833. So the loss points will be calculated as stop loss minus the sell price. So we have a stop loss of 22 points, loss points of 22. Our risk capacity remains the same, 20,000 per trade. The quantity we have to short here is 909. It will be calculated as 20,000 divided by 22. It comes to 909. The lot size, if you check out, it is 500. So how many lots will you trade? So you will trade 909 divided by 500, that is 1.8 lots. Whether you will take this trade? Yes. So ideally you can go with 2 lots here. If you take this trade with 2 lots, your quantity will be 1000. If the stop loss gets hit, your loss will be 22,000. So ideally you are supposed to take a risk of 20,000, but in this trade you are risking 22,000. So again, depends upon you. You can take either 2 lots or you can go for just 1 lot. But whatever you are following, follow that system consistently. See, now we are very much aware that all these levels which we are talking about are futures levels, right? So all these are futures levels. Now if you want to take this trade of Titan futures long, let me just revise the levels for you right now. Let us say that you can buy Titan futures below 936.5. This is the trade with a stop loss of 902.5 and a target of 978.5. Now just as you determine this trade setup, you have to go to check, you have to first check whether the trade fits the criteria. Now you see that the trade does not fit your risk management criteria. The trade is exceeding your risk limit. Even if you trade with just 1 lot of 750, you are risking more than 20,000, so you will not take this trade. But what if still you want to take this trade? There is a way out. You can take this trade in equity cash, not in futures, because in futures the lot size is fixed. So what you can do here is you can take a trade in equity cash. Now how to do that? How to determine whether should I take this trade or not? The first thing which we determine is the quantity. So quantity, we know that 588 quantities we need to buy, but now we have to look at the market price. So in the futures the idea is such that we can buy at any price below 936.5. So let us check what is the current price. So here we see that the futures price is 936.55. Now you guys know that all these levels are futures levels, right? That is why we are talking about the lot size. Now let us take this trade. Let us take the example of Titan here. If it is a buy, if the idea is to buy Titan below, let's say 937.5 with a stop loss of 903.5 and a target of 979.5. Now this is the trade idea, right? Now if you want to take this trade in futures, you cannot take it. Why? Because your risk capacity is getting violated. if you take just one lot here, then your risk per trade is exceeding rupees 20,000, so you will not take this trade. Now what if still you want to take this trade? Is there any way out? Yes, there is a way out. You can take a trade in equity cash and not futures if this is an intraday trade. So what you can do is, first determine the quantity. We determined the quantity, right? It is 588 quantities. So how do we trade in equity cash? The only thing we know is the quantity should be 588. So we have to go to the terminal, we have to go to check prices. The idea is to buy Titan futures. Titan futures below 937.5. If I look at the current price of Titan futures, it is 936.55. Is it within the buying range? Yes, it is, because we can buy the Titan futures at any price below 937.5, and currently it is at 936.5, so we are getting a good price, we can buy this. But since we are not able to deal in futures because of the risk constraints, we will look at the cash price. What is the cash price? It is 935. Now since the futures price is in the buying range, we can immediately buy 588 quantities of Titan at 935. Absolutely fine. Mind you, this is the IIFL interface. The second thing we need to determine is the targets and stop loss, because there is a gap of 1.55 rupee here, so we have to adjust our targets and stop loss by 1.55. We have to reduce the target and stop loss by 1.55 from whatever the trade idea which we had generated. Why do we have to reduce? Because the current gap is 1.55 between the futures and in the equity cash. So the stop loss here will be 902, the target will be 978. The buying price was 935. So I hope it is clear to you now how we can trade using equity cash when the trade idea is originally given in futures. You just need to check the price difference and adjust your stop losses and targets with that difference. Now basically we are dealing with three styles of trading. One is intraday, the other one is swing, and the third one is positional. Now you are very much aware about all these concepts, right? The intraday is buy today and sell today itself, or sell today and buy today itself. The swing or positional style needs to be carried forward to the next day. It is called swing or positional, right? Swing is for a period of maybe 3 to 6 days. Positional is above 6 days, right? Now there can be two types of trades, whether it is a long trade or whether it is a short trade. Now I am just informing you, just in case you do not know about this, the above adjustment which we saw, the idea being originally represented in futures and we traded using the equity cash, such an adjustment can be done in this case, that is if it is a long intraday trade, and is in this case if it is a long swing positional trade. It can also be done in this case if it is a short intraday trade, but such an adjustment cannot be done on short swing or positional trade. The reason is legally you are not allowed to short sell in delivery, but you can short sell in intraday. This is the simple reason. The important word is short sell equity cash in delivery. However, you can short sell in futures. Whether it is intraday or whether it is positional, you can do short selling in futures, but when it comes to short selling in equity cash, you can only do such thing in intraday, but you cannot do it in equity cash in delivery. If you do it, you will be charged with a penalty. So please do not do it. Now I hope it will be easy for you to adjust when the trade idea is generated, the trade setup is generated in equity cash, right? And you want to trade in futures, the reverse case. You just go to the market watch, you look at the price of equity cash, of the Titan cash price and the Titan futures price, and make necessary adjustments to the stop loss and to the target. So if the trade idea is generated in equity cash, you can also trade in futures just by looking at and comparing both the prices and the difference between both the prices, and then you can adjust your targets and stop loss accordingly. One another important thing, just as you have placed any order gets executed, the first thing you have to do is place your stop loss order, then do whatever you want to do, but just place your stop loss order. Please never forget this step, very important. Now in case of an intraday trade, if you have taken a bracket order or a cover order, your stop loss gets automatically set just when you place the order. But if you have taken a normal trade, then you must place your stop loss order immediately after the trade gets triggered. In case of positional trade or a swing trade which gets carried forward to the next day, I want to inform you how to place stop loss and target orders. How do I place it? How do I do it? That is what I can share. Now when the day opens, before 9:15 a.m., I place my target order. Before the market opens, that is at 9:15 a.m., before it opens, I always set my target order. In case of, I'm talking about swing or trading or positional trading, when the position is carried forward to the next day, right? So if the position is open from the last day, from yesterday, then today, before the market opens, I will place my target order. Then after the market opens, I will wait for 3 minutes. I will wait for 3 minutes, that is at 9:18 a.m. I will place my stop loss order. So what I mean to say is that my target order will be placed before market opens, and the stop loss order will be placed after 3 minutes, that is at 9:18 a.m. Now sometimes it will happen that the market has gapped down or gapped against your position, and even at 9:18 a.m. you see that the price is beyond your stop loss. The price is already beyond your stop loss. So what you need to do in that case is you exit the trade immediately at the market price. Please do not wait. Please do not have those false hopes that this will happen and it will recover. Anything can happen in the market. We are concerned about minimizing our risk whatsoever. So at 9:18 a.m. if you see that the price is beyond your stop loss, immediately exit the trade. Do not wait. But if it is within your stop loss, then place a new stop loss order only at 9:18 a.m. I hope you liked the video. I hope you will follow the instructions carefully. Thanks for watching. Happy trading and goodbye.